Bitcoin is seeing wild fluctuations. Are you ready to invest wisely? Let's tackle the million-dollar question. Can you retire faster through real estate or Bitcoin?
This debate isn't just academic. What does Ken McElroy, a seasoned real estate investor, think about the recent Bitcoin craze? Ken, you highlight that real estate has created more millionaires than any other asset class. Can you elaborate?
Absolutely. It's not just about appreciation. It's about utility and cash flow, key components for any retirement strategy.
So, you would suggest that even with Bitcoin's rapid rise, stability beats speculation?
Exactly. The unpredictable fluctuations of Bitcoin make it a tough choice for those nearing retirement.
It feels like gambling. One day it spikes, the next it dips drastically. How is that a retirement strategy?
Exactly. Remember, this isn't Vegas. Planning for the future requires consistent income, not just price points. With real estate, you not only generate monthly cash flow, but also enjoy substantial tax deductions.
But isn't it hard to manage all that? How do investors deal with maintenance?
That's the beauty of it. You spread the risk by investing in multiple properties. Real estate gives you direct control. Banks will lend against it, which is something Bitcoin lacks.
Exactly. You can provide collateral, and when done right, your properties pay themselves off. I believe everyone should have a mix. Some Bitcoin for potential growth, balanced with strong real estate investments.
So prediction, a diversified approach is the best safeguard against future volatility.
Absolutely. Diversification guards against erratic market swings.
Remember, it's not just about where the market is today, but where it will be when you need to retire.
Exactly. Make decisions rooted in stability for peace of mind in the long haul. Imagine waking up one day to discover there's no federal income tax. Sounds fantastic, right? But Graham Stephan suggests this may come with strings attached. Graham's dissecting the proposed tariffs and the reality of living tax-free while he reveals shocking economic truths. In essence, we're looking at tariffs intended to replace income taxes, but what would that mean for buying daily essentials? Let's explore how these tariffs could lead to higher prices, not just for luxury items, but everyday goods. Let's break down tariffs. Simply put, it's taxation on imported goods. If a 100% tariff is placed on Mexican toilet paper, suddenly both local and imported rolls cost the same. Sounds fair, right? But what happens when consumers feel the pinch? Prices rise, affecting everyone from families to businesses. Okay, while tariffs might protect local jobs, they also raise prices. Economist estimates could add $2,000 to American households annually. Can you afford that? What if this backfires, leading to retaliation and market shrinkage instead? It's a double-edged sword. History shows us the fallout from tariffs. The Smoot-Hawley Act is infamous for worsening the Great Depression. Prices soared while trade ground to a halt, a grim reminder.
So, the piecemeal approach of leveraging tariffs can backfire spectacularly, leading to lower overall economic activity.
Moving forward, one can only speculate. You might find yourself facing higher prices and turbulent trade relations. Could this be the new norm?
If tariffs stick around, we may see a shift in consumer strategies. Will we prioritize local goods, or will we adapt by seeking more affordable options?
The takeaway? Understand tariffs' ripple effects and prepare accordingly. It's about staying informed and adaptable in these unpredictable economic times.
Don't just rely on government decisions. Know how to protect your wallet as these changes unfold.
Stick around as we dive into how cryptocurrency regulations could redefine investment landscapes in future episodes.
Tariffs might affect traditional markets, but crypto offers a wild new frontier. Don't miss it.
Today, we're diving into the economic state of the nation with Brent Johnson, who believes we're facing not just an affordability crisis, but a true inequality crisis.
That's right. The issue lies in how we've structured our financial system. It's a system designed for growth, leaving many behind.
Hold on, Brent. Are you saying wage hikes alone can fix this economic mess?
Well, it's about balancing both. Wages up and prices down, which sounds simple but is incredibly complex.
Brent argues that simply tackling prices doesn't suffice. It's a much larger systemic issue.
So you're saying root-level changes are needed, not just temporary fixes?
Exactly. It's like trying to treat a fever without addressing the underlying infection.
We have seen income inequality grow, leaving many struggling to afford basic necessities.
But how did we get here? isn't it about how wages aren't keeping up with inflation?
Correct. It's a challenging spiral that connects to larger socioeconomic trends.
The Federal Reserve's fight against inflation often feels like playing a game of whack-a-mole.
Does that mean rising rates could worsen the affordability crisis?
Exactly. We need to recognize how entwined these policies are.
Brent thinks quick policy implementations are crucial for policy success.
Are you saying Trump could either be the solution or part of the problem?
Right. It's all about how he strategizes through these economic pressures.
Brent outlines how inflation doesn't impact everyone equally.
So we're back to the idea that some groups are severely affected while others thrive.
Exactly. We must confront how these challenges hit our economy differently. Brent anticipates 2025 as a year of adjustment and volatility.
Think of it as a roller coaster ride, thrilling but uncomfortable at the same time.
Yikes, I just hope we're all buckled securely.
Brent consistently emphasizes preparation over prediction, a vital mindset.
And like paddling upstream, it's about steady, informed actions that lead to progress.
So financial awareness equals empowerment. Got it.
The statistics are in, and they're concerning. Less than 25% of homes are being sold to first-time buyers. What does this mean for the market? Christina Smallhorn dives deep into what's happening and why we should care. So, Christina, less than 25% of home sales going to first-time buyers sounds alarming. Why is that important?
Every solid housing market relies on first-time buyers. Without them, who's left to keep the market moving? Barbara Corcoran called it an alarming trend, and I couldn't agree more. With averages soaring to around $500,000, it's like a cruel joke.
$500,000 for a starter home. That's absurd.
We must understand that first-time buyers traditionally drive market recovery. If they're absent, we face a real crisis.
What do you think led to them stepping back?
The fact that more than half of homes are priced above $500,000 puts out a massive number of potential buyers. High interest rates cut right through buying power, making it difficult for many to even consider homeownership.
But isn't that just part of living? Rates go up and down.
True, but when your starter home costs as much as a mansion, that's a problem.
When my parents bought their first home, it took 2 years' salary. For millennials, it's 6 to 8.
Wow, the landscape really has transformed. Can first-time buyers even break into this market?
If we see a dip in rates, it may spur activity from buyers waiting on the sidelines.
But history shows when rates drop, home prices just escalate. It's a vicious cycle. Ultimately, we need to encourage policies that support these buyers, not just let the market dictate their fate.
Absolutely. It's time we collectively push for change. The aftermath of Hurricane Helene has exposed not just physical destruction, but also deep emotional wounds in our communities. Melody is here to guide us through what's really happening on the ground.
It's a complex situation, Travis. We're witnessing one of the most significant disasters of this generation, and most people don't truly understand the severity.
Absolutely. It's eye-opening. Let's dive into the heart of this conversation.
What we're seeing is the power of human resilience, but also the staggering hurt that still lingers in these communities.
Exactly. It's like watching a community band together like a family in grief, striving to heal. We often overlook the human element in these crises. Volunteers here are battling their own demons while helping others.
Right? And it's often those who have experienced trauma who understand the pain of others the best.
It reminds me of the saying, wounds can make you wise. Their suffering fuels their dedication.
The dedication of SAR teams is incredible, but it's chaotic out there. They need more structure.
That chaos comes with an emotional price, doesn't it? The trauma they witness can leave lasting scars.
It's important to communicate their struggles so we can adequately support them. There's so much misinformation flying around, making it difficult for volunteers to coordinate properly.
It's like trying to navigate a fog without a compass. You can't see where to go.
Exactly. And it adds a layer of stress for those trying to make a difference.
What can our viewers do to help? Every small effort counts, especially in rebuilding lives.
Absolutely. Grassroots efforts are what sustain communities during these tough times.
This experience will push communities to develop systems to be better prepared for the future.
And it could lead to more robust support networks for volunteers, ensuring they have the resources they need.
In these times of uncertainty, it's essential to lift each other up.
That's right. love and service will lead the way forward.
To everyone watching, your involvement matters. Thank you for being part of this journey. What an enlightening compilation of thoughts and perspectives we've had today.
Absolutely. Melody, Christina, Brent, Graham, and Ken all provided such depth to our understanding of the economy.
Right? I was particularly struck by Melody's emphasis on empathy in disaster recovery.
And how Christina highlighted that decline in first-time homebuyers is critical. It's like the pulse of the market.
It's a tough situation, especially with Brent's assertion about inequality as a rising threat.
And on top of that, Graham's take on the tariff. How could such a proposal impact prices so significantly?
That's the million-dollar question. And then Ken argues for real estate over Bitcoin. What a debate.
Exactly. The disagreement between investment strategies shows just how nuanced these decisions can be.
If you've enjoyed these insights and want more expert analysis, hit that like button and subscribe.
Your subscription helps us keep delivering valuable content like this. We're all in this together.
Thanks for tuning in, and don't forget to check out our other videos for more financial wisdom.